Because you have these mixed use communities, David, you have a sense of what's happening in all sectors of real estate, really. Give me your sense of how rising rates are affecting your business.
Well, rising rates are clearly slowing home sales. But I would tell you that this cycle and this downturn is so much different than the last. I mean, and despite the headlines, and I hear it all the time and listen to Diana on CNBC, it's why I carry my umbrella, because I think the sky is falling. But it's yet to hit me on the head, because this dynamic is so much different. The last downturn at the global financial crisis, we had meaningful oversupply. We built more homes and household formation for 10 years, and that exact inverse is true today. We have 4 million less homes on the ground than we have of household formations over the past 10 years, and we're not close to meeting that demand. Couple that with the lack of land inventory that home builders own, specifically in the warmer, less expensive markets like Houston, Phoenix, and Nevada, where we see either 7, 9, or 11 months of inventory on hand, about half of what I would say is equilibrium.
Well, Houston says, look, we're going to build up, not out, so we don't need more land. We just need more skyscrapers, I guess. And they don't have zoning laws, so you can build wherever you want. I was just at a conference last weekend, David, where they said these zoning laws are keeping us from thinking about how do we use, I don't know, decrepit malls that are just sitting empty, and we should be able to turn those into apartments and affordable housing for people. Are you finding yourself in a position where you need to innovate or think differently about how to use the property at your disposal?
We're constantly thinking about what's next for the consumer, and we're building within our communities to meet the demand of those consumers. And whether that's higher density multifamily apartments, smaller homes with home offices, or any other innovation that's meeting those demands, we're moving forward on. I would argue that part of the reason why these markets in the Sun Belt are warmer and less expensive and remain affordable is that innovation has been forward, and approvals have been easier to attain, and municipal financing is easier to achieve. All the financing that we're seeing in terms of the water, sewer, and infrastructure we put in the ground are largely reimbursed through municipal bonds in these markets, which we don't see in some of the more expensive markets.
Are you seeing, David, any change? Let me come at it a different way. Are rising interest rates making you think differently about the kinds of projects or the scale of projects that you will be undertaking over, say, the next 5 years because the cost of money is higher?
Right. It absolutely makes us rethink all of our new development decisions, making sure that we can maintain that premium on what we're earning on the capital invested above our cost of capital, which is clearly rising. What we've seen to date is increasing rental rates, specifically in multifamily apartment buildings, that have more than justified that, such that we're able to continue to invest and develop out these communities. We've always sold land to home builders just to keep up with underlying home sales. So as those home sales start to slow with these higher rates, we'll sell less land to make sure we maintain equilibrium within our markets.
I want to mention you're coming to us today from the Tin Building by John George, which is in Pier 17. Yeah, this is a new concept market, bars, restaurants, built on Pier 17, which got wiped out during Hurricane Sandy. We're approaching the 10-year anniversary of that. I want to ask you two questions here. You've invested nearly $750 million in this property. Are you starting to get concerned about whether you're going to be able to recoup a return on that investment? That's part one.
No, not at all. In fact, we see the vibrancy and the foot traffic here at Pier 17 and the Seaport hit record levels, even that pre-pandemic levels. Our concert series, we've never seen more tickets sold or a greater number of shows. This food hall opening tomorrow night on a 10-year anniversary of Superstorm Sandy, adding what is, we think, a catalyst for all of Lower Manhattan in terms of a culinary destination, is going to continue to attract more and more traffic here. And traffic's the key to unlocking value in New York City. We've seen it time and time again. And when you have a world-class destination with great concerts, incredible restaurants, and a food hall that's never been built in Manhattan before, we'll definitely continue to see that foot traffic grow.
Well, I guess if the big banks are ordering people back into the office, it's icing on the cake for you down there in the Seaport. Part two, because you've decided to rebuild right on the water and it's a beautiful location, how do you factor in the risk of another hurricane coming through? We know that we're overdue for a Category 5. How do you manage and mitigate the risk to that particular property and your investment there?
Sure, and it's a great question because we didn't invest $750 million, as you said, Contessa, without thinking through the resiliency here. The pier has been built up above the floodplain, completely rebuilt and raised above. The bottom of Pier 17, where the utilities are stored, are inside a submarine hull, completely watertight. The tin building where I sit today, which is the John George Food Hall Marketplace, was moved further east towards the river just so that we could raise it up above the floodplain without hitting the FDR. So we think we've done everything imaginable to make sure that we have complete resiliency for that storm, which is inevitable and will come.
If somebody would hit the FDR, it wouldn't be all bad, David. You know, it just wouldn't.
David O'Reilly.
I'd lose some great visibility. I drove down it today, and seeing that tin building come to life is amazing.
Yeah, and also I got a little inside look there. The kitchen staff is on the 4th floor. They have an amazing view of the FDR.
Wow,
yeah,
nice.
David O'Reilly, thank you so much. Looking forward to coming down there. It's just a quick stroll for me.
Yeah, you live
right.
downtown.
Yeah, but
right.
Thank you for that. Appreciate it.
Can't wait to see you both.
Shepard Smith here. Thanks for watching CNBC on YouTube.